You're getting stopped out by 3 ticks before the move entry every single day. It's not the market and it's your entry. Give me 12 minutes and I'll show you exact model I use to pass prop firms and pull consistent payouts. No fluff. What is OTE? OTE is also known as optimal entry, and I'm going to show you guys what it is and why it works. Now let's go ahead and start this from a random New York session at 9:30 a.m. EST, and we're going to break down exactly how to capitalize on OTE and this entry model that you literally won't have any drawdown on your entries and you're going to bank every single day. Now let me show you an example. We'll play out the charts right here. We see that 9:30 we displace lower, we manipulate, we end up seeing a good displacement, and now generally most traders are going to try and long around this area, and what ends up happening, right? Price is just formulating. We take the longs, we take out these highs, we displace a little higher, and then now we're just stuck in the same area. Now here's what we seen as traders, and we might potentially look for longs around this area, right? We might be looking for a 1 minute gap to continue higher, whatever the case might be. A lot of traders will take the inversion to go lower, and the main idea of trading OTE is three simple concepts, right? Let's break down the higher time frame. What did the higher time frame do? We didn't sweep any draws of liquidity. We just tapped this general consolidation area, and then we've seen a good reaction from it. Now, what do we see internally? We have this 1 minute fair value gap right here. And if we drag this out, the 1 minute is getting respected. And also at this 9:34 a.m. internal low got manipulated. So we have this internal manipulation right here, which is also known as a turtle soup. We have a turtle soup. We have a good 1 minute fair value gap right here. And we want to see what price does around the order block. Now, an order block is a ICT type of PD array that allows traders to catch the absolute bottom and allows me to catch the absolute bottom every single day. So we're going to zoom in a little bit and we're going to chart out this order block from this internal low, or from this candle open at 9:38 to this second candle after that displays in the opposing direction. So we drag this out. What we want to identify here is this area right here, the 0.56279. And we want to see how price is reacting around this area. Now, in the normal sense where I would take this normally, I usually limit off of the 0.5 of the order block, and then I TP internal highs or even -4. And in this sense, the -4 is the top. We usually try and see price to target it. What ends up happening was this first initial trade, we tapped this 1 minute, we got the good displacement, we accumulated at -2, -2.5. We needed a little bit more orders, so we came back down to the order block to now see the full delivery to that -4. And this is an A+ setup for me. We have the 1 minute fair value gap, we have the turtle soup manipulation, we have the order block, we have the OT levels respecting as well. Now, another thing is you can also pair this with another OT level, which is from the swing highs and swing lows. So from this swing low to this swing high, where do we consequently tap at? From this swing high right over here, you see here, from to this swing low down here, we chart out the fib and we see 7.9, right? What is this 7.9 line right here? That is a rejection PD array that we look for, and it is a level that is mathematically proven to see buyers, or it is more of a discounted area for buyers to step in. So with all these confluences right here, the 7.9, the order block, and the 0.5, I want to see this setup delivery for longs to -4. Now, in this sense, I would limit at 0.5, but for this sake, we're going to market order because we like this candle closure. We're going to market order. We're going to buy here, and stop loss is going to go below the low that we just made, right? We want to see price continue going higher. And in the normal sense, you would put your stop loss at this low right here, which we'll do in this case as a protected stop loss. And we are going to TP at -4. So now we have this trade right here. We're looking for longs and buyers to step up into this area, and we do have draws up here, internal highs to go a little higher. So now that we're in OT, we're in discount, we tap that order block. Let's see longs deliver and play out for buys. What do we see on this next candle? A beautiful displacement and another beautiful follow through right past it. So not only did we have that beautiful reaction off that 0.5, we also formulated a micro SMT right here at this low. Now, if you go to ES, you'll see this on this day on May 5th, on May 6th. You'll see that this micro SMT formulated into place, and we had that 0.5 of the order block tapped. Now that we have that beautiful reaction, we know that we're secured to put stop losses to break even. Now that we're up nicely and we're targeting for that -4 move for that full TP, I want to see how price reacts on these next couple candles. The draw on liquidity is to that -4 STV level. So play this out. Let's see the characteristics. We rebalance right here beautifully into this wick, and then we respect this, also known as a 1 minute, which wasn't fully formulated, but the third candle wicked into it, filled the orders, and then made that last push up to that -4 STV. Now, absolutely beautiful. Ended up smacking that trade right over there, pairing it with internal manipulation, turtle soup, order block, a rebalance to that 0.5 tap, also known as consequent encroachment, which is a very known ICT PD array. And most traders like to capitalize on this type of setup or even these types of PD arrays because it is a precision entry in the model, also known as OTE, optimal entry, which is exactly what I preach to you guys every single day. Now, this isn't going to be the only example I show you guys. I'm going to go over and show you guys another example, but let's see what the price did after we tapped -4. Buyers, sellers got filled. Now sellers are taking over right now. We're getting back into the PD rate area. We're back into the order block. We displace it. We turtle soup this low, and then now we're filling for longs again. So peak selling on the day, knowing where the draw was, knowing where price was going to want to go, taking out this internal high as well here, and peak selling, absolutely beautiful. And we got the full move to capitalize on this trade. Now let's go to another set example, right? This is a beautiful trade here. We had double OTE. Let's go to another set example. Now, this was actually a trade I took earlier tonight, a couple hours ago, and I had find this setup a very optimal entry setup, right? We had market open it up at 6 p.m. for Asia Open. We came down at 6 p.m. We long tail wick this low right here at 124. So we took out the low. We ended up manipulating this low right here, coming down, and then the second candle displaced in the opposing direction. Now, here's where I was able to capitalize on this. I took my longs entry right off of this candle disrespect above this 6 a.m. open or 6 p.m. open. My apologies. I took my entry for longs at that 6 p.m. open, and I put my stop loss right below this wick for 14 points. So it was a relatively tight stop loss, and I wanted to see price deliver all the way up to this high up here at 6925. Now, let's break this down. Let's go to replay. Let's identify what happened exactly and how we were to capitalize on it. So market opens up. We come down, we sweep it, which is beautiful. And then now we're in a good area, right? So once we sweep that liquidity and then we displace in the opposing direction, this is known as an order block. An order block is the first candle that forms the manipulation and the second candle close after that. If you drag this out, you'll notice that the order block is now formed, and we want to see price rebalancing into the general order block. So once we've seen price rebalancing the general order block and this little gap right here that we have, also known as a sell side inefficiency, we had waited for the rebalance of that. Now, in any other given trade, I did get a little aggressive on this entry right here. I did take that displacement candle at 602, but that in itself was a good entry to take. So if we take this and simulate this how we would, stop loss below the lows, we see that displacement, we see the candle close, we want to target the DOL or the drawn liquidity. In this case, let's look at the negative 2.5 area, right? We have the entry at 2.5. We're looking for that trade, and we see that displacement. Stop loss at the lows as well. Form a manipulation right here. We saw this liquidity. We displace in the opposing direction. So we have the order block formulated, and we have this gap to fill. So we know that price is going to want to fill, and then we also have -4 standard deviation up here as well. So let's identify what does these next couple candles do. Price comes down, rebalancing into this 1 minute, and then displaces in the opposing direction. This right here is enough security for you. And just notice the characteristics of what price is doing. We're accumulating in this 1 minute right here, and then we fully displace, right? Beautiful. So full TP gets met at peak -2.5. And I want to show you guys another PD rate on this. I had taken my full TP right at this highs up here for 69 points. But if you notice that -2.5 got tapped to the peak, that is an STV level, sellers took over for a little bit. And most traders would have been looking for these shorts right here at this 1 minute inverse. And don't get me wrong, if you pattern trade IFEGs, you are most likely not seeing high win rate success. And once we've seen this inverse right here, this gap, most traders would have been looking to fill for shorts almost immediately. But here's what I've seen that most traders didn't see. If you grab the fib from this low right here at 611 all the way up to this high right here that we peaked at -2.5, and you drag this out, what can you consequently notice? Price tapped into 6.2 of the order, 6.2 of the fib or OTE, right? So since price tapped into 6.2 of the OTE, this is a discount in this range that we made in this little move up. And buyers will usually tend to wait for the rebalance to those levels to then pick up the buyers again and start getting some orders to go for higher draws. So when I took this trade, I didn't see or get faded at this pullback. I did not close early. I did not trail my stop loss anywhere in this gap. I put my stop loss right below 7.9 OTE. And only reason I did that was because we had this 1 minute here and we had the 6.2. So once that 6.2 got tapped, what do you see on that 6.16 candle? Immediate pop up, immediate institutional order drill, all the way up to these highs, full TPing, and ended up smacking for the full trade. And even -4 got edged right there, but we ended up taking out this high as well, peak selling, and just absolutely taking that whole trade from start to finish. This is one of my favorite setups, and I'm telling you guys, if you guys want to optimize and capitalize on trading like this, you guys need to take advantage of OTE, also known as optimal entry. This is going to help your trading and has helped multiple of my students with their trading and just seeing success in general in the markets and being able to find good entries with very little drawdown and being able to apply it on the charts on the daily without having to worry about crazy drawdown and having a good risk to reward. Now, if you guys want to learn more about how I capitalize on trades like this, you guys can join the Discord down below in the description. And if this video did help you guys out, make sure to leave a comment OT, comment thanks Amen, and I'll be sure to like your guys' comment. I'm going to see you guys in the next video. Be safe.